Good morning from London. I'm Anna Edwards alongside Guy Johnson. We're an hour away from the opening trade. Here's what you need to know. Donald Trump vows to sign nearly 100 executive orders within hours of taking office later today. And the president-elect promises to extend the deadline to sell TikTok. The Gaza ceasefire holds. 3 Israeli hostages are released along with 90 Palestinian captives, while more aid begins to flow to the Strip's 2 million residents. We'll have the latest live from a key crossing between Israel and Gaza. Plus, Davos is back as another Trump presidency looms. We'll kick off a week of interviews with some of the world's most prominent leaders in business and politics.
Anna, good morning. US markets are closed today. Asian markets were responding to what we saw over in the US on Friday. Plus, also the Xi-Trump call seems to have given a positive story there. That's not translating into European equities this morning. Euro Stoxx 50 futures are absolutely flat right now going into the Monday session here in Europe. The dollar is also on offer. The euro is bid. The pound is bid this morning. That's interesting going into that trade. We are anticipating a national energy emergency to be declared a little bit later on by President Trump. What does that mean for the energy market? What does it mean for the opening trade here in Europe when it comes to the energy stocks? And within the last few minutes, a big bounce in Bitcoin. We are at a record. We've bounced. There's been huge amounts of volatility over the last few hours. We are now up over 4% on Bitcoin. Again, what does that mean in terms of the relationship with equities? We are about to find out. The countdown to the opening trade starts right now.
I'm thrilled to be back with so many friends, supporters, and true American patriots on the eve of taking back our country. That's what we're going to do, take back our country.
Here we go. The Trump agenda is about to hit. We're about to find out, after so much waiting, what President-elect Donald Trump is going to deliver when he becomes President Trump a little bit later on today. The inauguration is upcoming. We've got some great coverage of that event. What is it going to mean for markets, Anna? I think is going to be fascinating. The early indications appear that he will focus domestically initially before moving on to the tariff trade later. Yeah,
there's a couple of areas that really catch our attention this morning. One is energy and one is crypto. And we look for clues, well, more than clues, executive orders probably, on both those subjects later on today. On the energy side of things, we think this is all pointing towards increased US production, reduce climate regulations, of course. And how much is he going to nod to data centres and AI needs? That could be interesting as well. And then on the crypto side, as you rightly pointed out, Guy, we've just seen a record on crypto, which is really fascinating because I'd written some notes just an hour ago which said that Bitcoin was under pressure this morning because of rivals, a new Trump coin. Melania has a new coin, plenty of new diversions, I suppose, from the old-school crypto trade. But we know that he is going to want to put crypto front and centre for his administration.
Absolutely. Amazing to see this bounce within the last few minutes, and the relationship between what is happening in Bitcoin and what is happening in stocks. The correlation's been really strong recently, so it'll be interesting on a day when we don't have US trade to see how that manifests itself elsewhere. The early indications seem to be that the market is taking what we're hearing thus far as positive. So when does the negative news come in? Will there be negative news that we need to take on board? We've had what appears to have been a positive conversation between President-elect Trump and the President of China. That seems to be taken as a positive. The energy story seems to be seen as a positive one as well. When do we get to the tariffs? Is immigration going to be a feature of day one, day two? What does that mean in terms of the labour market? So many things that we need to factor in. But the market at the moment, again, is it taking the positive side?
Yes, it seems as if the market is jumping on the positives, once again clutching at the idea that internationally maybe the tariffs won't come instantly, maybe we'll get some reprieve on that front for a little while. I mean, that's such a dangerous thing to say, but that's what the market is suggesting this morning, and that's the reading that it took from the Xi and the Trump call. But everything could change. There could be new news on tariffs this time tomorrow. We'll have to wait and see.
Absolutely, which takes us nicely to the TikTok call that we had between the President of China and the President-elect of the United States. I call it the TikTok call because it's so surprising that it's featured so highly in this conversation and how important this appears to be to both sides. It looks like there's going to be some sort of a 90-day extension, but that is premised on the idea that President Trump can deliver an expectation that there will be an acquisition by some sort of US entity, and that appears to be really difficult to determine at the moment.
Yeah, and I was reading one investor note yesterday that was linking this to the broader tariff trade, and I was thinking, is that an overstretch, this one TikTok story? Is it really of that significance? But that does seem to be the way that some are looking at this, that this is a card that Trump has to play. If he gives this 90-day extension, then, you know, there is more talking to be done with China on this, and how does that play into the tariff story more broadly? Interesting that the TikTok CEO is going to be one of those CEOs that we understand is going to be at the inauguration. So big tech, it seems, showing up in force for Donald Trump, which is also an interesting one for us to watch. But in terms of who buys this, I mean, Musk has been talked about, Frank McCourt, real estate name being talked about, whether it could be a smaller company, Perplexity AI, that's being talked about. But this is a business that could go for $50 billion US. You've got to be fairly substantial in size yourself to be able to acquire something that big.
And what does it mean in the meantime for companies like Oracle and Apple that have potentially legal jeopardy if this doesn't go TikTok's way? They are obviously key technology providers. The App Store, obviously a key portal for people to access this product. Are they convinced at this point that the administration has the legal authority, because we've just seen, obviously, the Supreme Court backing the legislation, to be able to make this move? So how do they play it? A really complicated puzzle, I think, for them to deal with.
And a lot of that seems to come down to just how realistic are the deals that are being talked about. Is there the imminent prospect of an American buyer for TikTok in the United States coming forward? And that seems to be part of that legal decision-making. So in terms of the issues hanging over markets, we're looking for lots of guidance then from President-elect Trump as to what he intends, looking at those executive orders. We do have news, though, from the Middle East, Guy.
We should talk about that. Let's talk about what has been going on in the Middle East, but specifically Israel and Gaza. The long-awaited and long-delayed ceasefire has begun after 15 months of war. The first phase of the 6-week truce deal aims to release 33 Israeli hostages and hundreds of Palestinians. What has happened so far? What are the prospects going forward from here? Ollie Crook joins us now from the Karim Shalom border crossing. Ollie, talk us through what we've seen over the last few hours and what we've seen thus far indicates about what happens next.
Yeah, so listen, Guy, I mean, it's been really very, very high tensions in Israel and really throughout the entire region since this deal was announced on Wednesday evening. Had a lot of stops and starts and a lot of snags, and in fact didn't even get clinched at the time that it was anticipated to. It was supposed to start at 8:30 yesterday morning, Sunday morning here in Israel. It came into effect at 11:15, and even in those early hours of Sunday, there was fighting in Gaza. There was a number of people that were killed. There was great sort of tension and wondering whether or not this deal would come into effect. It did, in effect, it did come into power. We now are 22 hours into the ceasefire deal, and everything seems to be holding. We had the release of the first 3 female hostages yesterday in Tel Aviv. We met with a great deal of joy. 90 prisoners from the Palestinian side released as well, mostly women and minors. And that takes us on to today, where we are also getting the cessation of the fighting. I'm just on the Gaza border, just for a little bit of context. We're just at the most southern point of Gaza. Right behind me, what you can see is the wall. That is the border with Egypt. And if you can see in the distance, there are a huge number of aid trucks that are lined up back there, because a part of this deal, the first phase of the ceasefire for 6 weeks, means that there will be much more aid finally flowing back into Gaza, whose infrastructure has been absolutely devastated, has been deprived of a lot of the goods that have not been able to get in. And to give you a little bit of context, I was speaking to the manager of the checkpoint a little bit earlier. They're expecting about 800 trucks at the various different checkpoints going into Gaza. About 600 of those will cross right here. And to give you a bit of perspective on the sort of average daily flow of trucks into Gaza for the month of January, according to an aid organization I spoke to yesterday, has been about 50. So this is a material step up, and they'd like to get that to about 500 to 600 trucks a day.
OK, so we look for more flows of aid then coming into Gaza, Ollie. Phase 1 then, as you say, is underway. 6 weeks that lasts. How likely is it, though, that we get to the next phase? Because there are a number of phases set out within this plan.
Yeah, listen, Anne, I mean, it's been so difficult to get to phase 1. I mean, we were just discussing it, you know, 1 year, 3 months more to get this sort of durable ceasefire, the first really durable ceasefire since the beginning of the war. And this was really sort of cast by Joe Biden and by the various sort of other players who negotiated this ceasefire as the first step towards the end of the war. Whether or not that is the case, I think, is a very open question here. You speak to people in Israel, both the Israelis, Jewish Israelis, Arab Israelis, everyone is sort of holding their breath, but are not necessarily confident that it goes to phase 2, because phase 2 in some ways is a lot harder than phase 1. Phase 2 is basically the total ending of the war. That means the withdrawal of Israeli troops from Gaza. That is something that is going to be very hard to orchestrate without the security guarantees that are required both from the Israeli state, but also the people in Gaza, and who is going to sort of be willing to take on that responsibility. Add to that the internal political pressure that you have here in Israel. You already had one of the key ministers in the coalition resigning Sunday morning over the fact that they went forward with this deal, Ben-Gvir. He's been very opposed to any kind of ceasefire. He wants to aggressively pursue the war until Hamas is completely eradicated. And Benjamin Netanyahu is really walking this fine line between the far rights within his coalition and also the guarantees towards Donald Trump, really giving himself, Benjamin Netanyahu, the leeway to say, yes, maybe this is the first step towards the end of the war, but maybe this is just a pause for the fighting that will resume again in 6 weeks. Again, it'll be very hard to tell, and it will be largely governed in part by the man being inaugurated as President of the United States a little bit later today.
Oliver, thank you. Bloomberg's Oliver Crook joining us there at the Kerem Shalom border crossing. So this, no doubt, will be part of the focus, along with plenty of other global geopolitical news lines at Davos and the Davos coverage that we bring your way. Bloomberg TV is live from the World Economic Forum in Davos this week. We have some great interviews coming up today. Investcorp Executive Chairman Mohammed Al-Ardi will be joining the programme. OMV CEO Alfred Stern also joining this programme. Later on, we'll be speaking exclusively in an interview with the BlackRock Vice Chairman Philip Hildebrand. Meta Global Business Group Head Nicola Mendelsohn will be with us, and the Saudi Economy Minister Faisal Al-Ibrahim will be with the team on the ground, Guy, as well. I mean, Trump and the inauguration for a second time of Trump coming this week as Davos kicks off. This is an incredible, I don't know, is it still a challenge for quote-unquote Davos man, if you like that loaded term or not? I mean, we're used to this now. We've been here before. 2017, we had the similar prospect hanging over the gathering.
There's a nice piece on the Terminal talking about the idea this morning that actually many executives are flipping back to a more Trump-like narrative. Is that their natural kind of habitat, or is that something they're faking for the incoming president in order to curry favour? Or is that, as maybe I originally suggested, something that actually they're quite comfortable with, this new kind of less left-wing agenda, you could argue.
Yeah.
So it's going to be really interesting to see how that works. Davos always has kind of an official agenda, but Trump is definitely the agenda. What happens next? It's amazing that it opens on the same day as we see the inauguration.
And he's not going to be physically there, but he is going to be in some sort of online dialogue, we understand, from the agenda. So he is going to be obviously playing that official role, but as you say, will also unofficially be all of the conversation, no doubt, at this event. I was reading an interest talking about ways we're covering this on the Bloomberg Terminal on the website. As the sun comes up over Davos, we are reliably informed. One of the stories I was reading, an opinion piece over the weekend, Guy, was reminding us or taking a step back and saying the world has become more Trumpian since 2017. And some of the things that seemed more shocking in 2017 from a Western leader have spread across the world. And now we see them from other leaders in the West, or wannabe leaders in the West, for sure. So that's an interesting theme. Also, we're covering it from a pursuits perspective. So I am reliably informed that there's plenty of advice on the Terminal about where to eat, where to network, even where to go clubbing, which seems a little premature at 7:13 on a Monday. Seems
remiss to talk not about the skiing as well.
There you go.
The snow looks very nice. What have we got coming up on the show? Robert Subbaraman, Nomura head of global macro research, is going to be joining us. Yep, they're talking about 6% yields at Nomura. They think that's where the Treasury could be going, the US 10-year. Peter Oppenheimer, Goldman Sachs chief global equity strategist. What would 6% yields do to his call? And Rebecca Harding, independent trade economist, joining us a little bit later. Are we not going to get tariffs? Are we going to get tariffs? We're going to wait and see. When do they come? Is it this week? Is it next week? Looks like there's going to be an initial domestic focus, but tariffs probably not far from President Trump's mind. What else do you need to know this morning? Let's run through some details. New analysis of the $3.7 trillion in profits made by hedge funds since 1969 suggests that almost half, amounting to $1.8 trillion, was gobbled up in fees. According to research by LCH Investments, hedge funds have raised their charges to 50% of gains, up from the roughly 30% they earned in the early 2000s. Some amazing numbers, worth reading that research. Asking prices for UK homes have started the year with their biggest rise in 20 months. According to online property website Rightmove, the average price for a property put on the market climbed by 1.7% to just over £366,000 in January. The figure suggests that sellers remain confident in the face of higher mortgage rates since October's budget. The key thing, actually, I think, is more supply coming onto the market as well. Spain's Prime Minister, staying with that theme, is proposing a ban on non-EU citizens from buying homes in the country. Sunday's comments by Pedro Sanchez go beyond last week's suggestion of 100% tax on foreign purchases. Sanchez says Spain has a shortfall of about 200,000 new homes a year. Britons are the largest group of buyers from outside of the EU and therefore would potentially be most affected by any change. This would upend years of Brits buying properties in Spain. But Sanchez is pulling some surprises out of the hat at the moment. This is certainly one of them, and this kind of crystallises some idea he talked about earlier. Do you see what happened with Telefonica over the weekend as well? That's a really interesting story. So it's really interesting as he tries to maybe generate some populism around his policies. Obviously, he is not right-wing, he is left-wing. He is in charge of the world, of Europe's kind of fastest-growing economy right now. So how does he harness that? I think it's really interesting to see the kind of moves he's making. He wants to control Telefonica. He wants to control the housing market a little bit more. How does this play domestically? Yeah,
certainly being very active, proactive, taking on business in a number of ways. This is non-EU potential buyers he's targeting, which is hence the reference to Brits, obviously, but it's also non-residents. So this is if you are not actually living in the property, which is probably important to mention. Interesting, you covered the UK housing market as well. Pricing resilience there, but I was looking at 5-year fixed mortgage rates after what we've seen in gilt markets over the last couple of weeks, up at 5.3%, the highest since August. So you wonder how long that resilience, that positivity in the UK housing market remains the story. So we'll continue to watch that, of course, as gilts open in 45 minutes or so from now. Coming up on the programme, we'll have a focus on some of the stocks that could be on the move this morning. Maersk is called lower, while the shipping sector is still on the lookout for developments in the Red Sea. We'll check on those stocks at the open. Plus, a Trump digital token is unveiled, adding a new complication on the future of crypto under the new administration. That hasn't stopped Bitcoin, though, touching a new record just this morning. Up next, we'll be in Davos with our first big interview of the gathering. If you have any questions, if you'd like to get involved in any of these conversations with us, IB plus BBTV Go is the function to use. Get used to this shot. There'll be plenty of snow in these shots from Davos as the week continues. This is Bloomberg.
I think it's time we went to the Swiss Alps. The World Economic Forum is kicking off today in Davos. Leaders from governments, businesses, of course, discussing their agenda for the year ahead. I suspect it'll be dominated by Donald Trump. Bloomberg's Jumana Masechi is there. She's there all week and joins us now. Jumana.
Yes, good morning, guys. Well, it's always a great opportunity to speak to some of the biggest figures around the world to talk about how they're thinking about the outlook for 2025. I'm really happy to say that one of those big names is sitting next to me right now, Executive Chairman of Investcorp, Mohammed Al-Alti. Great to have you with us. I'm just going to start off with, I guess, sort of an open question about how you are feeling about the global economic outlook for 2025.
Well, thank you. Thank you for having me. It's really great to be with you. We're really positive about 2025. I think the world is feeling a bit better. You know, the macroeconomics is improving. Last time when we were here, the predictions for recession was at 70%. Now it's below 30%. In the last 2 quarters, we have seen a lot of activity on private equity and investment in general. Investors are deploying. So yeah, we feel good about it, despite you know, maybe some challenges.
Yeah, President Trump returning back to the White House. Today's his inauguration. As an investment manager, and of course, you do deploy a lot of capital into the U.S. Do you think the return of Trump is going to create new opportunities? We
think so. We think the new administration is pro-growth. I think it's inevitable that they will also do something about taxes and regulation. This is all good for business, and what we saw in the first administration of Trump was good.
How is the fundraising environment expected to pan out in 2025? How do you think it's going to differ from 2024, to build on what you were saying?
I think it will get better. Obviously, I think there is more and more confidence from investors about what's going on. Obviously, the United States economy continues to be strong, and we see a lot of opportunities there. The Gulf region is, again, attracting a lot of investment, but also India and some of Southeast Asia. Now, Europe obviously is having a lot of political, challenges, but we continue to see innovation. I mean, the venture capital activities has really increased in the last few months. And we continue to see companies and opportunities.
Interesting. You do see those opportunities in Europe. Many people are shying away from that right now. I do want to ask you, though, you announced this morning a $2.3 billion funding round from Asian institutional investors and pension funds. But part of that mandate is to invest money into the U.S. Do you worry at all about some of the geopolitical headwinds that could prop up, particularly because of this, U.S.-China and the tensions between U.S.-China, what that could mean?
So we're really convinced about the sectors that we're in. The couple of mandates that you talk about, which is around $1 billion from institutional investors in Asia, was really to invest in real estate in America, and particularly in the logistical sector. So we're really very, very positive about that. We think it's the right thing. In Asia also, we are really expanding more, both our presence and our fundraising. The Malaysian Pension Fund has given us a mandate of over 110 million CIC. We launched the Golden Horizon last year with them to go along with the pre-IPO fund in the Gulf to really deploy in the Gulf and in China.
You've been in the credit space for a very long time, but private credit has really taken off in the last year or so. Do you think we're getting to a point now where there are too many players entering into this market?
I don't think so. I think credit is growing nicely, and so far I think everyone is abiding with the rules and the opportunities. Our credit business last year been very active. We've done 6 CLOs. We've transacted over $2 billion. We refinanced, and so I think I think credit is doing well and bringing investors good returns and returning their equities.
I've got to ask you, there's been quite a little bit of turnover in Investcorp over the last couple of months. Some departures, some new hires. Is the strategy of the fund going to change? Can you give us an update on how you see things panning out and all these changes, what they mean really for investors?
So, Joanna, as you know, in the last few years, we have really expanded and grown a lot. Now, at $55 billion, we're in the right markets, in the right asset classes. We've streamlined our strategy and we've refreshed our leadership and management teams. And so, looking forward in the next few years, I will not be surprised if we look for a liquidity event sometime, whether by a strategic partnership or even going to the public markets again.
So, liquidity event as an IPO?
It could be an IPO, could be a strategic partnership in the right time.
Okay, well, thanks for that teaser. Great to chat to you, and thank you for kicking off our Davos interviews. That was Mohammed Al-Arti, Executive Chairman of Investcorp. I'll toss it back to you guys.
Jumana, thank you very much. Jumana Besecha at the World Economic Forum in Davos. Plenty more from Jumana coming up. We heard there from the Investcorp chairman a positive take on what President-elect Trump means for the U.S. economy. No doubt we'll get others with similar views on the slopes of Davos. What else will we hear? We'll also be getting a take on the oil markets. That will be a key focus, of course, as we watch the inauguration ceremony taking on in the executive orders that will follow. 8:45 a.m., we'll be having a conversation with the OMV CEO. So that's something to tune in for. More from Davos coming up shortly. This is Bloomberg. Welcome back to the opening trade, everybody. 30 minutes from the start of European equity trading, and we're pretty flat Flat to positive? No, not really, just flat for European expectations. It is, of course, Inauguration Day in the United States, so that's where a lot of the focus for market participants is going to be. It's not going to be on trading in the United States because US futures also pretty flat, pretty mixed, but we don't have cash trading today because it is a public holiday. We also don't have cash treasuries trading. There will be bond market activity, and we'll bring that to you here in Europe when we see it, of course. And a lot of the focus has been on the dynamics of the US bond market and how that is flowing across the Atlantic into the rest of the world's bond market. So we'll certainly keep across that. But there you go, early moves, very small on European bond markets. Now, Bloomberg has learned that Donald Trump plans to invoke emergency powers to boost domestic energy production. At a pre-inauguration rally, the US president-elect also laid out his plan for signing executive orders.
Within hours of taking office, I will sign dozens of executive orders, close to 100 to be exact, many of which I will be describing in my address tomorrow.
For more, let's bring in Bloomberg's Valerie Seitel. Valerie, are markets jittery then about some of the announcements that are yet to come? Energy in focus, crypto in focus.
Look, Anna, the market is surely waiting for bated breath for more details of what will be in those executive orders. And the risk is to the downside in the dollar if we don't get any new information on tariffs. If instead, as reported, he perhaps looks to domestic issues instead of international trade and tariffs as his first day one signing of those executive orders. So the risk is to the downside of the dollar. We've already seen the dollar trade softer in the Asia session, down 0.2%. But boy, the dollar trade has taken the macro markets by steam. It has risen 8% since that Trump trade first began in September. If we flip on, we can just take a look at how it's performed in a wider view. There we go. Ever since the end of September, we have risen now 8% in that dollar. All those dollar longs piling in. We've seen it rise in the positioning data as well. If we flip on to my next one, and just take a look at how these hedge funds, even though the dollar has been rising, they have been chasing that position. We have seen week after week a rising in speculative long positions in the dollar. So the risk is that we do find some disappointment if we don't get any announcements on tariffs today. Another item that is not waiting for any further cues from Donald Trump is Bitcoin. We have reached a new record high in trade just this morning. 108K is where we are trading at the moment, up nearly 5% so far in this morning.
It's been an amazing 24 hours, the trade out of Sunday into Monday. Such whippy action we are seeing in many cryptocurrencies. Bitcoin certainly front and centre. Valerie, thank you very much indeed. As we've been mentioning, of course, it is Inauguration Day in the United States. We've got special coverage coming up of President-elect Donald Trump's inauguration. That is going to kick off 4 p.m. UK time is when you can start watching. That's 11 a.m. over in Washington, where it's quite chilly. Remember, this is going to take place indoors today. Let's turn our attention to what this may mean for markets. Nomura sees a chance of a US 10-year, the US 10-year Treasury yield rising to 6% this year, citing expectations of worsening fiscal positions and higher inflation under President Trump. Joining us now is Rob Subbaraman, Nomura's head of global macro research. Subbaraman. Rob, good morning. Thank you very much indeed for taking the time to be with us. Is 6% the base case?
No, it's not the base case, Guy, but I would say there is a decent risk, in my view, that we could be heading to somewhere between 5 to 6% this year on 10-year treasuries.
What gets us there? What are the main drivers?
I think one is we're advising our clients not just to look at the last 10, 20 years, but you really need to look. I think the playbook should be the 1990s and the 1980s. So in the 1990s, that was a period where inflation was sticky. We had a very strong equity market. Greenspan was talking about the amazing effects of technology. Back then it was the internet. And the Fed wasn't able to cut rates much. And we think a lot of those things are in place now. And the only thing that isn't is very large deficits now, fiscal deficits. And that's more like the 80s. And when we throw both those things in the 1990s environment and the fiscal deficit, and as you just mentioned, Trump's administration coming in, and we think ultimately a lot of those policies will be inflationary, at least in the first year. It does raise the risk, in our view, that 10-year Treasury yields could go through the 5% mark.
Good morning to you, Rob. You say we've got sticky inflation, which is a bit like the 90s. We've got large deficits, which is a bit like the 80s. Does that mean that either of those things have to worsen from here to get us to 6? Or do current levels of inflation and fiscal deficits justify 6?
Yeah, it's a good question, Anna. I would say current levels. If the 1990s and the 1980s are a lesson, we're at those levels where Treasury yields could rise, and it could just be there's more inertia now. It takes a bit of time before the weak fiscal position and sticky inflation is captured. I mean, one thing we did, which it's a bit of a back of the envelope, it's quite simplistic, but if you add the fiscal deficit as a share of GDP to inflation, that combined number is the highest since 2011. But we know back in 2011, we were coming out of the global financial crisis. Unemployment was over 9%. So if we adjust it for the stage of the cycle by dividing it by the unemployment rate, that number is the highest since at least 1960. So, adjusting for the economy being near full employment to us suggests that inflation, fiscal deficit can easily lead to the 10-year yields going through 5%. And we're saying a range of between 5 to 6% is possible.
Yeah. And, Rob, have you been comforted by anything we've heard from Treasury nominee Scott Bessent during these confirmation hearings? We've heard quite a bit from him about his awareness of the delicacy of handling the bond market. And some have taken his language and his messaging to conclude, oh, he knows what's at stake here. He's not going to do anything that's going to mess with this sort of delicate balance. And therefore, that keeps a lid on yields. Do you buy that?
I mean, it's certainly possible. I think his remarks have been quite soothing. But at the same time, I think before he was nominated, he did warn about the fiscal situation as being quite dire. And he also talked about how a lot of debt issuance in the US has moved to the very short end, Treasury bills, and that needs to reverse. So, I think he's also aware that it's going to be quite challenging. We'll see. I think it's going to be a very interesting year. And, I think our view is some of the things that could be disinflationary, like deregulation, like increasing energy supply, we're not so sure that they're going to come in that quickly. But, that's going to be very important, the sequencing of Trump's policies to see whether inflation picks up or not. The Nomura view is that inflation will pick up this year because of Trump's policies.
Rob, given that, how high is the risk that the next move by the Fed is a hike?
It's definitely a risk. I mean, the house view we have is there's one more cut coming in March, and that will be it this year. But, it really depends on how we see inflation playing out January, February, and whether the US economy remains resilient. It's a high risk to our view, and we've been flagging this to our clients, that the March cut may not happen, and our rates could be on hold this year if inflation stays sticky. And then if rates are on hold, it's quite possible the market pricing starts to move to pricing in hikes. Now, whether they happen or not, we don't know. But if you look in the last couple of years, market pricing has been a lot more volatile than the Fed rate trajectory.
Rob, what do we need to watch for on tariffs? The market seems quite able, when it wants to put aside concerns about tariffs and say, this isn't coming today, so I'm not going to worry about it today. What are you watching for?
Well, we'll be watching to see, the 100 executive orders, whether there are some aspects around tariffs around that. It's quite interesting, all the news that we've been hearing here in Asia in the last, I'd say, the weekend, last 48 hours or so, has actually been reducing our expectations that there could be tariffs announced on day one. And also it's looking like there's signs that Trump is reaching out to China, phone call with China's president. China's envoy is coming. There is an envoy coming to the inauguration ceremony. And it seems like a lot of the talk on the weekend has been more around border issues and deregulation. But let's see. It's still, one thing we can say with Donald Trump is he's unpredictable.
Rob, how self-correcting would higher yields be? Would they generate big responses in other asset classes? Would equity markets roll over? Would that be something that the Fed has to get in front of? I'm just wondering if we do continue to track higher in yields, at some point do we reach a tipping point where it reverses relatively quickly?
Yeah, so there's a few aspects around that. It's a great question. I'd say the points I'd make is, one, if the US economy proves resilient and growth holds up and profits hold up, it's quite possible that you see, 10-year yields creeping over 5 and not too much of an equity market correction if the economy is resilient. On the other hand, it depends on the pace. If we go up very quickly from where we are now, around 4.6 to let's say 5.25, a bad scenario would be that, say, causes the housing market to correct, the equity market to correct, and you see a swift movement in portfolio rebalancing from equities to treasuries, and then maybe that limits the amount that the 10-year yield can go up. The final point I'd make is what happens overseas, right? It's quite possible that sovereign yields outside the US in countries that have weak fundamentals go up even faster than in the US. The rest of the world doesn't have the dollar as the reserve currency, which is kind of better. So another scenario is you get overseas bond yields going up even faster. That breaks things, causes turbulence, and then a flight into dollars. So there's I made it sound very complicated, and I think it is. But we're just flagging at Nomura, there is this risk, in our view, of 10-year Treasury yields sometime this year, ending at 5 to 6%.
We're at 4.6 now. Should I be buying at 4.6? What do you think the trade is? How do I position around your call?
Well, I would say if we start to see news on tariffs coming through, to us, that's going to be the most inflationary policy out of all Trump's policies. And if that happens, then I think you should be positioning for a sell-off in the US Treasury market.
Rob, you've mentioned how this might play out for other bond markets globally, those countries with weak fundamentals and don't benefit from having the dollar as their reserve currency, for example. Does something break if US yields get to 6%?
I think a lot, Anna, depends on the speed that they move. But if they move up quite quickly, ironically, the risk is that they don't stay up in the US that long, partly because the US economy could start to crack, but also overseas economies, and this is where I think is a bigger risk, start to crack. And that is in some DM economies with bad fiscal positions in Europe. But a lot of EM countries as well have large fiscal and current account deficits, and the risk premium could be repriced. And as I said, if that happens, if they go up very quickly, you get a sharp slowdown in US growth, and then the expectations of the Fed cuts come back. And then overseas, if things get wobbly, you could get a flight into dollars. And both those things could then cause the US Treasury market to yields to actually go back down again.
Rob, thank you very much. Developed markets with bad fiscal fundamentals. Well, we take our pick. Rob, thank you very much. Rob Subbaraman, Nomura's head of global macro research. We thank you for joining us very much. Coming up on the programme, we'll focus in on some of the stocks that could be on the move this morning. Telefonica pushes out its long-standing executive chairman in a move backed by the Spanish government. We'll discuss that next and look at the other stocks to watch at the open. This is Bloomberg.
Together, we're going to cut your taxes, end inflation, slash your prices, getting them back down, raise your wages, and bring thousands of factories back to the USA, right where they belong, and that'll be done through tariffs and smart policy. We will build American, we will buy American, and we will hire American.
That's President-elect Donald Trump speaking at a victory rally in Washington. That just last night, ahead of his inauguration, which comes later today. What does all of this mean for markets? What are we watching for? Joining us now, our Markets Live executive editor, Mark Cudmore, for 3 minutes on the markets. Mark, let's start with what we're watching for from Trump then in his inauguration and, crucially, the executive orders. Is the focus going to be on these domestic issues, as we keep hearing, rather than on tariffs, at least on day one, or can we not even be certain of that?
Good morning, Anna. With the important disclaimer that obviously none of us have certainty exactly what Trump will deliver. I have no special insight. He is certainly unpredictable. The reports over the weekend are consistent from all sources that the day one executive orders will be more domestically focused. If that is the case, then the initial headline reaction will be like, hey, no tariffs out there. And that would be probably good for risk assets, particularly China, Hong Kong stocks, Asia stocks generally. But everyone knows that's just day one. And then, of course, those tariff headlines may very well come later on the week and are likely to, is I think, the base case expectation. So it's not like it's a rally that's going to get sustained or run too far. It's just short-term relief. I think also if we get those domestically focused executive orders in day one, as those reports imply, well, then that should be bearish energy at the margin. It's talking about, an emergency order to essentially free up those energy assets, particularly in Alaska, but also it's not focusing on more kind of moves against Iran or Venezuela. So on both sides of the equation, it should be marginally bearish oil prices, energy prices.
Morning, Mark. What do you make of the Bitcoin price action?
Bonkers, absolutely crazy. Look, I think there's the kind of two ways of looking at this at the moment. If you want to be negative about it, you kind of go, hey, everyone was betting on a Bitcoin reserve. Well, will Trump set up a Bitcoin reserve, or will he get everyone to buy his new, dollar Trump meme coin or the dollar Melania meme coin? So therefore, he's diversifying back into like meme coins across the board, which undermines this idea that Bitcoin has been the kind of the one chosen one. On the kind of bullish side, the fact that this can, suddenly be announced and just attract, at least on paper wealth, billions in assets so instantly. And the fact that, you've got a president now who has the vast majority of his wealth, paper wealth, in crypto, and therefore has incentives to support the crypto industry, well, then that's positive. But then the flip side is, if he's ever going to monetize that wealth, well, then he has to sell it all down again. So all we know is massive volatility out there. And I think the crypto price action flags what we're about to embrace really wholeheartedly this week and probably for the next 4 years.
Yeah, OK, so volatility, we can be certain of that at least. Brent prices over 80, holding above $80 a barrel mark. Of course, they've been trending upwards recently, partly the weather, partly policy against Russia and what's expected there. And we're going to be hearing about executive orders on the energy front that could put downward pressure, I guess, on oil prices.
Yeah, absolutely. I think if they are those domestic focused measures, executive orders in the first as mentioned, then it's likely to be bearish energy at the margin. On the flip side, if it's domestically focused, it might be a little bit more pro-growth from the tariff headlines. Tariff headlines, remember, aren't pro-growth out there. I think the longer-term story is China's got an extra, oil's got an extra premium at the moment that's maybe not justified. Chinese growth in oil is probably not likely to come through, and therefore I think ultimately oil prices have downside this year.
We're about to find out. We're going to get some details. The inauguration is coming up. It's a big day for markets. US markets are closed, which is amazing considering what's about to happen. So we'll be looking for the price action maybe a little bit later. Mark Cudmore, thank you very much indeed. Bloomberg Markets Live executive editor. MLIV Go, the function on the terminal. You're going to want to watch that for the next few hours, few days maybe. This week is going to be amazing. Let's talk about the stocks you're going to be watching this morning. Maersk is one that I highlight. The reason I highlight it is, A, it's been cut by Jefferies this morning. The second reason is that we obviously have the Gaza ceasefire holding. There is a line you can draw to the Houthis, which have been pushing the idea that they have been attacking shipping in support of the Gaza situation. It was interesting, Maersk, a little cautious on Friday about a return to the Red Sea, but it'll be interesting to see whether this holds, whether shippers will start maybe returning to the Red Sea route. That's disinflationary. Yeah, absolutely. Certainly a major disruption that we have endured to the shipping industry, and if that were to be rethought, then that would be significant. Let's also focus in on the UK house builders guy then today. We've had that UK house price data, showed some resilience really
in the pricing story ahead of perhaps a stamp duty change coming up a little bit later on in the spring. But of course, you offset that with the fact that we've seen 5-year fixed mortgage rates at their highest since August. And that sounds as if that might not be very positive for house prices. So with all of that in mind, we'll certainly watch what's going on with the housing sector here in the UK. And you're focused on Spanish telecoms. Kriti's not here, so somebody has to.
I have to take on and wear that hat, talking about what's happening in Spain. This is a really fascinating story. So Sanchez, really busy over the weekend. You could almost Trump-like in terms of the approach. He's throwing his weight around at the moment in terms of what he's doing. He's talking about a ban on foreigners buying houses in Spain. Obviously, there's some nuance to that story. But he's also effectively come through and replaced the executive chair, CEO, at Telefonica. I think there's some political overtones to this. Certainly the sort of the read-ups that I've been reading suggest that. Jose Maria Alvarez-Palet has been replaced. So we've got a new CEO coming in. This feels very political to me, and I just wonder how stock investors are going to be reacting to this story this morning, because this happened over the weekend. We've yet to fully price this, and it's a bit of a surprise.
Yeah, OK, so we'll watch that. We'll also watch to see whether there's any fallout from an FT report around Commerzbank. They've been reporting that we're going to see job cuts and perhaps the potential of moving some roles from Germany outside Germany as Bettina Orlock tries to step up her defence against a takeover by UniCredit. That's a story we've been watching intensely for many weeks, of course. Job losses, according to that FT report, could be in the low thousands, but we'll certainly keep an eye on that. And we are expecting February 13th we get a strategy update from that business.
I'm just going to flag Entain as another stock that we may want to watch as well. That could be a really interesting one. UK FRC probe into an audit was done by KPMG in 2022. That stock could move significantly at the get-go of trade this morning. The opening trade is next. This is Bloomberg. Monday morning, good morning. Couple of minutes to go until we start equity trade here in Europe. Remember, we're not going to start equity trade over in the United States a little bit later on. It is a holiday there. It is also Inauguration Day there as well. So there's kind of a lot going on that we need to factor in, but we can't do it. So today, maybe a little quiet. We'll see. Maybe it gets a little bit choppy in US futures later on. We'll see what happens there. Friday's trade looks a little bit like this. I'm not sure there's a particularly sort of strong read across. Asian trade overnight has been quite strong. There may be some effect, but I don't think there's going to be a huge amount. European equities actually look fairly flat at the get-go this week. I suspect this is just the calm before the storm, as I say. US out today, MLK Day, but we do have a return of the US obviously tomorrow, and we'll be into the Trump administration by that point. So let's take a look at the futures picture. FTSE futures fairly flat. In fact, futures pretty much across the whole of Europe are going to be fairly flat today. You're probably not going to see a great deal of volume at an index level. A single stock story level, though, Anna, there may be a few interesting stock stories that we want to be focusing on.
Yeah, absolutely. We are going to be watching Maersk. That's certainly one of those. Guy, you were talking about this just minutes ago, in fact. Cut to hold at Jefferies. What does the holding so far, at least, of the ceasefire between over Gaza, of course, what does that mean for the Red Sea, the use of the Red Sea? Is there a link to the Houthis that we can draw there? So that's certainly something that market is going to be watching very closely. The UK house builders story is worth watching as well as we look at these house prices that look resilient, but mortgage rates also have been recently on the rise. And Entain is also worth watching. The Financial Reporting Council is starting a probe into the audit of Entain by KPMG, so we'll watch that one, Guy.
Absolutely. Some single stocks maybe to focus on. Indexes, I think, are going to be reasonably quiet. We start Davos, we start the Trump administration today, and we've got a US holiday to all factor into our thinking. So I think maybe some cautious trade, but this maybe, as I suggest, the calm before the storm. It's going to get bumpy out there. How quickly that happens, well, we'll wait and watch exactly what gets announced early. The FTSE 100... absolutely flat as a pancake. Nothing to see here at an index level. So that story going nowhere. The Stock 600 going nowhere in a hurry. I'm struggling to find something to talk about here. I suspect it will come, but just not yet. So we're anticipating that we're going to see relatively low volumes today. The United States market is out. Asian markets, in some ways, you could argue, were responding to the news that we got. Friday into the weekend. Nothing really new for Monday morning for Europe to latch on to. A little bit of our performance coming through from the CAC 40, but not much there to talk about. Anna, save me. Give me some news at a sector level, at a stock level.
I'm not sure I have much to save you with, Guy, unfortunately. But markets do look pretty divided when it comes to sectors. So just over half of them are going higher. So technology is the best performing sector. Banks also not doing too badly, industrial goods and services on the rise, but none of that looks incredibly compelling. I mean, technology is up by 0.4%, so that's the best we can do in terms of the sector look. But that's interesting because that's actually being led by Prosus, which is, of course, a big holder of Tencent, and so that's a China theme. So we've seen the Asian market actually much more resilient, much more positive than we're seeing here in Europe. And so we do see some areas where that reads across, and that Prosus line is one of those. On the telecoms side of things, that's an area of weakness. Telefonica is down by 3.8%. You were talking about some of the action being taken there by the Spanish government, so that's worth watching as well. So there are some news lines that do seem to be playing out this morning. On the upside, to do with the positive view being taken, the glass half full view being taken by Asia markets, perhaps on the downside on telecoms.
Entain, I just want to double-check that this is today's trade and make sure I've got this right and make sure we're looking at what is happening here. Maersk is down. So Entain's quite choppy. It's down by around 1.6% at the moment on the back of the audit news we've had coming through this morning. Maersk is a little bit softer as well. It's interesting to see some of the miners coming through a little bit softer too. There's some interesting commentary around what could happen in terms of the iron ore market and how oversupplied that could potentially end up being. I think there's a couple of XDs in the market as well that probably are worth ignoring. National Grid, Prosus and BNP Paribas. An eclectic mix. Banks seem to be doing a little bit better this morning.
Let us get into our next conversation then, as we wait for the Trump administration to get underway, the executive orders to hit, the trade policy to be further set out. Peter Oppenheimer joins us, Chief Global Equity Strategist at Goldman Sachs, with us bright and early this morning, this Monday. Peter, thank you for joining us this Inauguration Day, this market holiday in the United States as well, crucially. So it seems that the Asian equity session, the Asian equity investor waking up glass half full this morning, saying Trump and Xi had a good call, great. Maybe we don't get hit initially with lots of negative trade news flow as a result of that. I mean, is that going to be clutching at straws? What can we be certain of on this Inauguration Day, do we think?
Well, thank you for having me. I think not a lot. We're waiting for news, and I think that investors are going to read in every little bit of nuance in terms of the choreography of conversations and how they go with other leaders and so on, and really wait until we get more concrete news on policy, on trade policy in particular, because that will have a very big impact, particularly on markets outside of the US. But I think context here is really important. The general setup is positive for equities. We've got continuing global growth, strong growth still in the US. That's been true for a long time. And rates are gradually coming down. That combination does tend to be pretty supportive. Okay.
Yeah, so far we've had a pretty positive take from the slopes of Davos this morning on what Trump means for the US economy. So that's, that view of him being positive for US growth and positive for US stocks maybe remains intact this morning. But we've also had a cautionary tale being told to us from Nomura about the risks that rates could go 10-year yields to 6%, not their base case, but it's possible. How much of a risk does that pose to stocks in the US, do you think?
That is an important risk, and again, context here is important. The backdrop from a macro perspective is very good, but we have to take into account the fact that we've had a tremendously strong rise in equity markets now, really starting back in the fourth quarter of 2023, when investors really first started to latch on to the prospect of lower inflation and interest rates. And if you look at 2023 and 2024 together, both years in the US market were up roughly 25%. Among the best two-year periods we've seen in the last 100 years. Alongside that, valuations have gone up. So a lot of good news is being priced in. That leaves equities more vulnerable to rising bond yields.
Is that what your clients think? You just had a big event in Asia. You've got one taking place in Europe this week. What are you hearing? What's the feedback?
Most people, I think, are generally positive because they can see that at least the US economy is continuing to grow, and others may be relatively stagnant, but not likely to move into recession. That's been our view for a long time. I think that's broadly now the consensus. There is a question mark over how quickly interest rates will come down, whether government deficits will force long-term rates higher. But broadly speaking, most of the people that we surveyed at our conference remain positive of equities, expecting returns of roughly 10%, and generally still very much focus on the same themes, with the US outperforming and tech being the main driver.
So is there any point diversifying?
I think there's a strong reason to diversify precisely for that reason. We, in our view, believe that because equities have gone up so much, they're pretty fully valued. That means we're likely to see less valuation expansion as a driver for index returns this year. And therefore, we're likely to see a better payoff for being more diversified.
What is the diversifier at this point? What is the best diversifier that you can see? Because diversification has meant underperformance.
It has.
Is that going to continue?
Well, I think there's two ways of looking at this. In an asset allocation context, we actually think being overweight of equities and bonds are a good way of diversifying some of the risks that we're seeing, and that's a position that we're taking. We're underweight of credit, for example. Within equities, we think that you can diversify by broadening out exposure in the US, away from the focus on the Magnificent Seven, although they're still likely to achieve good returns. We think the risks are going up, so we're looking at things like the equally weighted S&P or the mid-cap index there. We're looking at quality growth compounders outside of the tech sector. Some have derated a lot and are looking cheap and a good diversifier. And I think there are some opportunities geographically as well. You mentioned earlier that things like European banks are doing well, together with US tech. That combination, which we saw happening last year, is pretty unusual in the context of the last decade, but it's a reflection of some of the ways in which diversification are actually beginning to pay off. And we think we're going to get a bigger return from alpha relative to beta this year.
And Peter, when it comes to diversification geographically, looking at Europe, are the granolas in focus for you? And
yes.
Are you assuming that they are protected from tariff threats to some degree?
Yeah, I think that we like geographical diversification. I should say that Europe is the region where we have the lowest profit growth forecasts, but we think pockets of it are very cheap. You mentioned the granolas. They've been the dominant companies that we've been focusing on in the last sort of 3 or 4 years, generally have become increasingly significant as a driver of returns in Europe. They account for about 25% of the market cap. But interestingly, a number of them had difficult quarters last year and derated a lot. And that had a negative effect on the index. It's a bit of a warning sign in the sense of what could happen in the US. But some of these are now beginning to see better returns, and we've seen better results in luxury, for example. That's pushed up the value of these good quality companies again. We think there's really exciting opportunities there.
OK, so you might hope that that continues with the granolas and that they are maybe resilient, or at least not in the crosshairs when it comes to tariffs. What about growth out of China? Because some of them, talking of luxury, for example, have relied on that positivity out of China, and that domestic Chinese growth story just has been sluggish to materialise.
It has, and you know, again, these kinds of stocks that are very sensitive to China growth are very volatile around any news of changes in policy in China. We think there will be an easing there. That should be supportive tactically. But I think structurally, exposure to China is still going to be a headwind for European companies. And interestingly, if we look at our baskets of companies in Europe that have the highest exposure to China compared to the ones that have the highest exposure to the US, there has, of course, been a huge divergence. Those US-exposed companies have done much better. We would expect that to continue. And bear in mind that many of them also have production bases and costs in the US, and therefore are less vulnerable to tariffs.
Davos kicks off this week. Traditionally a hotbed of deal-making and M&A exploration, you could argue. Is there an M&A play this year? Does Trump bring more M&A? Is that something that I think need to think about as an equity market theme?
I think absolutely. Look, M&A is a function of a number of factors. Of course, principally among those is animal spirits and the optimism around things like deregulation, but also interest rates and the cost of capital easing after 2 or 3 years of significant increases, as well as, in some cases, a bit more of a tolerant view of consolidation that we're seeing in places around Europe, for example, I think will push up M&A quite a lot. We're also seeing much more build-up in IPOs, I think, and also activity from private equity who are sitting on assets that they may want to sell. So I think there's going to be a big increase in financial asset activity in general, which would be good for banks.
Big pickup in capital market activity. Is that something that happens in the United States purely? Is that something that translates across the Atlantic? Some would argue that the FTSE 100 and FTSE 250 are littered with potential stocks that could be taken out. Is there an international aspect to this, or is this a primarily US issue as we see deregulation? Though I would argue maybe the Starmer administration is talking about it here as well.
Yes, exactly. And these things actually tend to move in cycles globally. It may be driven by US and US animal spirits coming back more quickly, but I think it will dissipate and across the regions, and others will participate. And there is a global element to this. The dollar is extremely strong, has continued to rise, and that makes European assets, UK assets, some of which are very cheap, more interesting for US dollar-based acquirers. So I think that will be part of the process as well.
Peter, thinking about so we might see M&A. That's the thing we can focus on. Thinking about the granolas, as we were a moment ago, there's quite a few drugs names in there from the healthcare sector and drug companies specifically. Are you concerned about pricing over in the United States with the makeup of the new US administration coming in? We've already seen, I think it was Friday, we saw some jitters around some of the big names in Europe in that sector because of fears about pricing.
Yeah, well, I think those pressures can work both ways. Generally speaking, healthcare does tend to be a relatively weak sector into a US election cycle because it's a very politically sensitive industry. I think we'll get more clarity along the lines of many of the other issues that we've been talking about today, and that should be helpful. But I think that there's, the healthcare sector is cheap. Generally, these companies have got strong balance sheets, stable cash flows. And also, I think one of the interesting angles about healthcare is it's likely to be one of the biggest beneficiaries of AI, improving drug discovery, reducing the cost of innovation. And, of course, AI has been a central focus of markets in the last year or so, but mainly on the companies doing the CapEx investment. I think we will start to see more focus on some of the companies that can be beneficiaries, and I think healthcare is one of them.
Peter, great to see you. Thanks very much for stopping by to see us. Peter Oppenheimer, Chief Global Equity Strategist at Goldman Sachs. Thank you. Peter's got his granolas. We've got our Core 6. Let's show you what is happening with the Core 6 this morning. Centre of gravity here in Europe looks like this. As you can see, some green on the screen. Some decent gains being certainly posted. The luxury sector continues to come back. Ferrari, I would argue, should be in the red, but actually is in the grey right now. ASML is higher. Schneider's a little bit higher as well. Even Nestle posting some gains this morning. It'll be interesting to see how the car sector trades this year. Like Ferrari's a bit different, and I joke about it being in red. But what else we got coming up?
So that's the picture across the Core 6 then, Guy. European equity markets flat to positive, increasingly a little more positive as we go through the session, particularly coming out of Paris. Coming up on the programme, we take a look at the crypto market after Bitcoin hit a record, and Memecoins from Donald and Melania Trump have been launched. That over the weekend on the cusp of the inauguration, of course. Are they something that benefits Bitcoin, distracts from Bitcoin? Lots to talk about there. That's coming up next. This is Bloomberg.
"17 minutes into the session, let's take a look at where we are with equities here in Europe. A little bit more green on the screen, you could maybe argue. As you can see, we are at least up, but I suspect with the US out, we are going to spend most of the day sitting on our hands, waiting for the inauguration, waiting for news to come through of exactly what Trump is going to deliver on day one. Day two. Let's talk about some of the individual stocks that are certainly on the move here in Europe. Telefonica is one out of Spain before leaving for Davos. The Prime Minister, Pedro Sanchez, certainly has made some moves that have been causing considerable controversy. One of those certainly surrounds what is happening with Telefonica. Over the weekend, we saw Jose Maria Alvarez-Palet, the executive chair, CEO, being ousted from this business. This felt certainly the read-ups that I've been reading suggest that maybe there was some politics attached to this, and it's interesting to see the market reaction. We'll wait and see whether or not there's a change of strategy. What does this mean in terms of the way that this business is going to progress from here? Certainly the spotlight on Telefonica this morning, and the stock in that spotlight down by 2.2%, Anna.
Let's talk about the banking sector. And actually, we're seeing the banking sector making pretty modest gains today. So Commerzbank is in good company, but it is making gains more strongly than the wider sector. So the sector up by 0.4% or so. Commerzbank up by 1.7%. And this on the back of an FT report that talks about the strategy revamp featuring job cuts. Could there be job cuts at Commerzbank? Could we see thousands of them? And could there also be moves to take some of the jobs out of Germany and put them in cheaper locations? February 13th is the date we get a strategy update coming through from Commerzbank. So we'll certainly look for an update ahead of that then, Guy, at that to see whether this is going to be sufficient, if this is going to be the type of news flow we get to fend off that approach from UniCredit.
Let's talk about what is happening in the shipping sector this morning. We see interesting moves being made around Maersk. The stock was down a little bit more. It's only down now by 0.2%. A downgrade coming through from Jefferies. The price target there, though, still 11,500. As you can see, we are trading sub that. So it's interesting to see, just in terms of the numbers, what we're looking at there. There is also the wider picture of what is happening in Gaza and whether or not this translates into an elongated period in which we're going to see the Houthis not attacking shipping in the Red Sea. When do we start to see maybe shipping returning to that key route? That should, in theory, lower shipping rates, which in theory should be bad for AP Møller Maersk and its peers.
Yes, we had seen it, the share price on the rise as a result of those higher shipping rates as they took the long route round Africa. Let's talk about what's going on with Entain. This is a gaming company in the old school sense of the word, so a gambling and sports betting business, owned brands like Coral, Ladbrokes, Party Poker, Sporting Bet. And this business is in the crosshairs when it comes to regulation. The FRC in the UK, the regulator around audits, they are taking a look, starting a probe into the audit of Entain. That was conducted by KPMG, so we'll see if that one has an impact. Down by 0.9% right now for that share price. Off earlier lows, was down a little bit more than this earlier on.
European stocks just beginning to soften up a little bit. So we're off our early highs, but there's not a lot of volume and there's not very many big moves out there for us to pay attention to. What there are some Trump stories. Trump having a huge impact in a number of different areas, and certainly one of those relates to TikTok. The incoming president has promised to sign an executive order delaying the enforcement of a ban on TikTok in the United States. The president-elect was speaking at a rally in Washington, D.C. ahead of his inauguration.
If you don't approve, they're out of business, they're worth nothing. If you do approve, they're worth like $1 trillion. They're worth some crazy number. So I said, I'll approve, but let the United States of America own 50% of TikTok.
How does it work? What authority does he have? What legal backing do these moves potentially pose to some of the operators in the United States that support TikTok? There's so many questions around this story. Let's try and get some answers. Tammy Basin, technology analyst at Bloomberg Intelligence, joins us now. So where are we? We went dark. We've come back. But the app is not supported. So where do we go? Where do we go next?
It's a great question, and it's a quickly evolving story, as we've seen with President-elect Donald Trump's statements yesterday. He plans to sign an executive order potentially today that would basically tell his Justice Department not to enforce this law, which is still in effect and which still does pose serious liability for the companies who TikTok works with. So Apple, Google, Oracle as a hosting platform. So right now we're in the status where it's still illegal, but TikTok has made the decision to come back on. But like, as you mentioned, it is not supported in the U.S. right now.
So Trump has promised an executive order then that will save TikTok in the United States. How is that going to work? Because I understand in order to do that, he has to prove that a deal is fairly imminent. Is that the crucial factor?
That would be. So I think the executive order is what he's choosing to do instead of that alternative scenario. And the alternative scenario is in the bill itself, it says you can have a 90-day extension, but there has to be a legal document that is signed saying that you have moved far along in a divestment. I don't believe that we're anywhere near that status, so I think what he's choosing to do instead, potentially, is signing an executive order, which would be trying to buy that time and also telling his Justice Department not to enforce the law. However, it would still be in effect.
So I'm a lawyer, I'm in-house counsel at Apple, Google, Oracle. What am I thinking?
that's sort of the $850 billion question, because the amount of liability that could attach if you're violating this law is enormous. So you have to have, I think, a lot of confidence that Trump's Justice Department, and maybe 5 years down the line, the Justice Department at that stage is not going to enforce this law, because there's a 5-year statute of limitations. So I think you have to be fairly uneasy right there.
Just very quickly, the critical thing about the App Store stuff is that it's not supported. So it's not available, but the critical thing as well is that it means you don't get updates and you don't get security fixes and all those things that are so critical to the kind of the operation of this app are sort of come through the App Store.
That's absolutely true. So we might be in a stat right now where it just sort of slowly deteriorates unless there's more support for that app.
Tamlin, thank you very much. Bloomberg Intelligence technology analyst Tamlin Basin with the latest on that tech story, part of the geopolitics narrative as well, though. Let's focus in on Bitcoin. We've seen plenty of volatility there. Bitcoin hits a record ahead of the US presidential inauguration after both Donald and Melania Trump, they debuted their meme coins over the weekend. That was described then as a bit of a distraction from Bitcoin, but Bitcoin this morning seems to have benefited somehow from this news flow. Let's unpack all this. We're joined by Valerie Teitel, who's been poring over the details. Val, a big move in Bitcoin then, in contrast to all the notes I wrote pre-show, which were telling me that this was going to put Bitcoin under pressure. What's going on?
The narrative that perhaps this launch of these political meme coins will sap flows from Bitcoin is showing us that is really not the case this morning. If anything, it's just accelerated the momentum and the excitement around cryptocurrency under another Trump administration. But that Trump coin this weekend caught many's attention. It hit a $15 billion market cap over the weekend, which puts it at the top 20 coins out there. And Binance and Coinbase both said they intend to list the coin on their platform. And that big worry that perhaps it would rattle the broader Bitcoin price really not becoming to fruition this morning. We hit a new record high just an hour ago, 109K, a fresh record on the eve of Donald Trump's inauguration.
So the two key words for the next few days are executive and orders, or order. What is it going to mean for the crypto world?
It could mean a lot. We could see some substantial executive orders. There was many that were talked about before, whether we designate crypto a national priority, somehow create a Bitcoin stockpile. You know, the U.S. government does sit on Bitcoin that has been seized with justice moves, or possibly create a crypto advisory council. So we could see some momentum in cryptocurrency only be added to today if we do see a raft of executive orders of focus on the crypto industry. Again, just when do we get a glimpse of these executive orders? I think many over the weekend thought we'd get some leaks over some of them. We have not really seen very much. And in his rally yesterday, he said he was going to be detailing them in his inauguration speech. And detailing 100 executive orders might take him a while.
I was about to say, he could be there for a while. He's talking about 100. So
he has previous on some fairly long speeches.
He spoke for an hour over the weekend.
Yeah, and that was just the warm-up act.
This was the kind of the pre-party. Valerie, great stuff. Thank you very much indeed. As we've already indicated, we're going to have some great coverage coming up from DC a little bit later on. And we'll be talking about the inauguration in a great deal of detail. It is indoors. It's a bit chilly, we understand, in DC. But what can we expect from Donald Trump's next few days? What are we going to be learning? What is the White House going to deliver? Is it all going to be domestic? What's the tariff story? I think a lot of people are going to be waiting on that. Anyway, we've got some great coverage coming up. That is a live picture coming to you from Washington, D.C. The inauguration is the big event of the day, and we will be discussing it next. This is Bloomberg.
This is the opening trade. Welcome back to the programme, everybody. 30 minutes into today's session, not moving anywhere in a hurry, it seems, on European stocks. This feels like a pre-Davos, importantly pre-Trump kind of a session this morning here for Europe. The US President-elect Donald Trump has celebrated his impending return to the White House with a rally in Washington. So this is even ahead of the inauguration, staging a rally in Washington. He told supporters over the weekend he plans to sign dozens of executive orders in the hours after taking office.
I'm thrilled to be back with so many friends, supporters, and true American patriots on the eve of taking back our country. That's what we're going to do, take back our country.
Joining us now, Bloomberg's Jill Desis, who has analysis of what we can expect. So there are a couple of sectors that are really sort of playing high in our minds. One is crypto, the other is energy. We're, of course, focused on tariffs. Jill, Trump has pledged a flurry then of executive orders. So what are we expecting on day one?
That's right, Anna. So the first thing, I really want to key in on the energy sector that you just mentioned there. People familiar have actually told us that one of the things that Trump plans on doing is actually declaring using some emergency powers to sort of get some of his initiatives related to the energy sector through. Now, exactly what that means and ultimately what Trump can do is still incredibly vague right now. But, this is obviously sort of hearkening back to some of his campaign promises about trying to boost domestic energy production. When it comes to what Trump, as president, through an executive order or some sort of emergency declaration, can actually enable there, it's somewhat limited. There's maybe some things that he can do with crude transport, maybe some things when it comes to the energy grid, but a lot of that does come down to sort of like what private enterprise actually wants to handle. Aside from that, what we've really kind of, gotten the suggestion from Trump himself is really that tariffs and border control are maybe going to come into the equation here. But I think at this point, Anna, it's still is somewhat unclear, and I think what we can all just kind of brace for is this idea of a flurry of executive orders that, we kind of want to see and interpret how much of that is just immediate action versus how much of that is kind of, elsewhere kind of remains to be seen.
Jill, do we have any sense of the kind of choreography here? Is it going to be domestic first, then international? Is that the way we should be thinking about it? Or do we get sort of all 100 on day one and we spend the next few days trying to pick through the details?
I mean, honestly, as I recall from covering the first Trump administration, a lot of the time you would just wake up in the morning and then you would see a tweet and then it would be about, whatever was on Trump's mind that day. And so it can kind of feel a bit chaotic there. This time around, it does seem like, the Trump administration incoming does have a plan as to what they want to focus on, as to whether that's domestic or international. A lot of it kind of seems a bit focused on a lot, right? I mean, obviously, from the tariff perspective, you do have this idea that Trump does want to go a lot harder on introducing new levies, whether that be honestly to adversaries or in some cases, as we've seen with Canada and Mexico, sometimes allies. But, in addition to that, obviously, some of those issues with regard to domestic, security, border control, that kind of thing are also front of mind. So, again, I think we're just going to have to kind of wait and see what happens. And it really is, again, he's really promising that from day one, Inauguration Day, he really does want to implement a lot of these types of policies.
Jill, thanks for the update. Thanks for the preview. Jill Desis joining us ahead of the inauguration a little bit later on. Apparently, we're going to get all of these executive orders detailed. So, in theory, we should have some details to work with for the rest of the week. What will those details mean to Rebecca Harding, independent trade economist and senior fellow at the British Foreign Policy Group? Well, let's find out. She joins us around the table. We're all on tenterhooks. We're waiting to find out exactly what we are going to learn, what the Trump administration wants to do, what he wants to do. But everybody's kind of prepared. So what does this week look like? Is it we get the tariffs, then we get the response, then we get kind of a countervailing sort of response from the US as well? How does this work? How does this week work?
So I think what we're going to see is a bunch of statements about intent, particularly in terms of foreign policy, particularly in terms of tariff policy. There will be a lot that he says that's interesting but not detailed. Right. It feels a little bit like Back to the Future in terms of the slightly chaotic air that's around everything. So we will see things that aren't particularly baked in and aren't particularly certain. So we're going to be dealing with a week of uncertainty. That said, it will be a very clear direction of travel. So we'll know exactly what he wants to do, I think, on tariff intent. So he will lay down the foundations for how he wants to use tariffs coercively in the future. So
if you're sitting in Beijing, if you're sitting in Brussels, what do you do? Do you wait? Do you respond instantly? What's the playbook?
If you're sitting in Beijing, you've been preparing for this for the last 4 years. Let's be clear on that. So you've been preparing for the entire time that Biden was in administration. You've been preparing for what might happen if Trump gets re-elected. So the Chinese will already have a plan. And don't forget, President Xi is in a much stronger place domestically in terms of his own political situation than he was at the beginning of the last Trump administration. They know each other quite well, these guys, so he will be prepared. The European Union, Ursula von der Leyen and Christine Lagarde have already said that they think that they're going to play along for a little while and see what happens. The biggest thing is whether or not tariffs are going to be used coercively to get more spending on things like defence across the European Union, because that is, and NATO obviously as well, because that's a really important thing.
Yes, so from a European perspective then, from what you're saying, it sounds a little as if they will, appease Trump, go along with what Trump is saying and say, sure, yeah, we'll do the things you're asking us to do, at least some of them, to try and prevent you putting on tariffs. Is that going to be the broad approach?
So I think what the likely scenario is that Trump will lay down a set of tariffs over, and it may not be this week, it may be over a period of time. Most of his advisors are saying they want it to be over a period of time, gradual approach. But what they will be doing is saying, we will buy American products. I mean, if we're going to have to increase our level of defence spending, for example, to 5% in order to avoid tariffs, we are going to have to buy American defence products. So there are a lot of things that the Europeans can do to say, yes, we'll buy more cars, we'll buy more agriculture, we'll buy more defence equipment, more electronics, more semiconductors. Those things are happening already. So I think they will appease to some extent, but there is also a very strong sense in Europe that Europe needs to become self-sufficient.
Yes. That's interesting because some of the line items you're detailing there, they are bought by governments. So defence products are procured largely by governments. But some of the other things you listed are not procured by governments. They're bought by other companies. So how will this be sort of dictated to European business that you must now go to the United States and purchase these things instead of buying them from the home market?
So they will go to wherever it's competitive to buy.
Yeah.
And we've already seen a lot of measures. Now, what's interesting here is that the Biden administration was actually quite aggressive on trade as well. Aggressive in a different way. So you had industrial policy as the main thing. He didn't undo any of the tariffs that President Trump implemented in his first term. So actually, Europe is quite used to this pivot on things like industrial strategy, the Inflation Reduction Act and so on, to working more with American businesses. Now, the interesting thing here is that Europe is beginning to think about its own internal supply chains as well. So European companies, particularly in defence and security, electronics, critical minerals, are beginning to think more about how to resource those from within Europe as well, because of the cost considerations.
Are more Chinese goods going to end up in Europe as a result of Trump tariffs?
Very interesting question. I think the relationship between China and Europe is going to take a while to settle down post-Trump. It's become very fraught anyway. European businesses and governments are very aware of the fact that there is a perceived threat from China in terms of lower cost, in terms of domestic security, influence, and so on. So Europe is treading cautiously. And, of course, there's electronic vehicles where Europe is trying very hard to promote its own interests. So I think the jury's out. But I think inevitably China will be looking to grow its partnerships with Europe as much as possible.
Is that going to be difficult, given the fact that it feels like the Trump administration is going to want countries to pick sides?
I think the picking sides element of all of this is the most interesting thing from a political and an economic point of view. And what we're beginning to see, if you look at the global payment system, if you look at cross-border payments, we're beginning to see a Chinese system through there that's an alternative to SWIFT. You've got the SWIFT system, you've got more renminbi-based trade going on. It's interesting. You are beginning to see this sort of bifurcation, if you like, of the international economy, and that was very evident at the BRICS summit last year as well. So what we've got is a situation where there is a risk that the world separates out. America's not going to discourage that. It will want the Europeans to pick sides. Europeans have to think about how they become more resilient themselves. And resilience is the important word there, I think.
Yeah, Rebecca, what kind of, when we look at the data, you know, we can hear the political rhetoric, some of that gets turned into policy, and then some of that shows up in the data later on. How long will it take us to see evidence of Trump's second administration in the data? How quickly do you think we're going to see changes in trade flows manifest themselves?
We're already seeing changes in trade flows. So if you look at the end of last year, we always see a spike ahead of the Chinese New Year in terms of international trade, particularly exports. China has already been moving its trade around, and it's already been increasing the amount of South-South trade. So there was a forecast that came out the other day that said 1.2 trillion extra dollars in South-South trade is going to start happening. China's already been reconfiguring its supply chains to that effect. So we're already seeing a shift. Now, the interesting thing is, will it overall affect the levels of global trade? And what's been interesting over the last 4 or 5 years is that volumes of trade have actually stayed remarkably similar. Values have changed, but the volumes of trade have actually stayed remarkably similar. So we're almost at peak trade, if you like. We're not going up by that much. It's 1-2% a year. It's been relatively low. So some of that is to do with the Chinese economy and the problems that it's got. Some of it is to do with the Russia-Ukraine crisis. Trade's been shifting around. The world of trade has actually been very difficult over the last 5 to 7 years. Really has. So what we're seeing now almost is an endpoint.
Yes, it's quite interesting, wasn't it, that we didn't see a wholesale about-face from President Biden when he came in on many of the policies that President Trump brought in his first term. Thank you very much, Rebecca. Thanks for joining us. Good to speak to you. Rebecca Harding, independent trade economist and senior fellow at the British Foreign Policy Group. We will have special coverage, whatever is coming our way on the trade front. Will it be in these executive orders? Will it feature in the inauguration speech itself? We will bring you special coverage of that inauguration of the US President-elect Donald Trump. That's from 4 p.m. UK time, 11 a.m. if you are in Washington. Coming up on the programme, we head to Davos to hear from the Austrian oil and gas company OMV. We're expecting to hear quite a bit about the energy sector in those executive orders and possibly during the inauguration. The CEO of OMV, Alfred Stern, joins the team on the slopes in Davos. This is Bloomberg. Welcome back to the opening trade. We're focused on US politics. We're also focused on the Swiss town of Davos for this year's World Economic Forum, of course, today. Bloomberg's Jumana Besetcha is there in Davos for us, and she's joined by another guest. Jumana.
Thanks, Anna. Yeah, sitting with me right now is Alfred Stern, the CEO of OMV. Great to have you with us. Look, I'm just going to start asking you about the outlook for European gas prices, because they have been on the up recently due to supply disruptions, due to cold weather. How do you see the outlook for gas prices in the coming months?
Yeah, great to be here with you. Looking at the gas prices, as always, they are, of course, dependent on multiple things. What is the weather going to be like, but also what the economy will be looking like throughout the year. What we did see, and that is clear already today, is we saw increasing prices because of the cold weather, and we saw depletion of the gas storages across Europe.
Yeah.
And that will have an effect because these storages will have to be refilled again, and that we will see. Hopefully the economy will be a bit stronger and we see increasing demand as well.
Yeah, I see inventories are sitting at around 75%, the fastest depletion since 2021. How quickly can the inventories be built up again over the course of the summer? And should we be worried about next winter?
Yeah, I think this is a normal process, and this winter is colder than the 2 winters before, and that is the reason for the faster depletion that we see. The gas industry is used to be able to refill those storages during the summer, and this is actually how this supply chain works.
So not really worried about next winter then?
That's correct,
yeah.
Right? I think there's enough capacities. It will depend a bit on the demand side, but there is enough supplies.
Yeah. Well, today's a big day in the U.S., the inauguration of Trump returning back to office. But obviously, energy is a big focus for this incoming administration. They've talked about drill, baby, drill. They've got big ambitions on both oil and the gas front. What sort of ramifications are you expecting for U.S.'s gas ambitions to have on European gas?
Yeah, I think energy is the lifeblood of our economy and of the life that we are leading. and the prices of energy depend on supply and demand. So increasing supplies is useful in order to drive growth, in order to drive economy forward. So creating an environment, regulatory and fiscal conditions that allow investment in all kind of energy is very important to drive the economy forward.
Is Europe allowing for that to happen?
I think this is something where we see the gas prices, but the energy prices in particular in Europe being higher compared to the US, for example. And the reason for it is very strict regulatory conditions and not enough incentives to invest here. So increasing supplies is what needs to happen.
Yeah, and sure, many European countries are going to be keeping a close eye on what the US's policies are in the coming future. I want to turn back also to just recent developments. You've stopped receiving natural gas from Russia via Gazprom for the first time in more than 50 years and currently involved in a litigation process with them. Just give us some color on, one, how successful you expect this process to be, and number two, how long you think it's going to take.
Yeah, so actually we are opening a new chapter in OMV. Since more than 60 years, it's the first time that we do not have supplies from Gazprom since beginning of last December. But we have a better gas supply situation now than we ever had before because we have diversified our supply sources. We have looked at own production, we have looked at long-term LNG contracts, other pipeline contracts. And with this, we have a stronger supply situation than ever before, which is allowing us to supply all our customers. Now, the arbitration that we had with Gazprom is actually finalized for our German Gazprom contract. And we were actually awarded damages of over 230 million. We were able, through this award, to actually set that off against our open gas bill. And that means we were able to actually keep that money. And as a result of this, Gazprom stopped supplying us in Austria, and we have terminated the contract.
Yeah. What if there's a ceasefire between Russia and Ukraine this year? Would you have to rethink that decision?
Yeah, so this was really a commercial and a legal decision because Gazprom multiple times violated the contract, and that's why we needed to take those steps. But in Europe, there's no sanctions on Russian gas, there's no law against Russian gas, and we will see what happens. But what we did see over the last 3 years, that Gazprom has become an unreliable supplier, and that is one of the issues. So if we want security of supply, we need to diversify our gas sources and also increase production in Europe wherever we can.
Let's turn to OMV. There's ongoing discussions about the petrochemicals merger of Borealis and Borouge with ADNOC. How are those discussions going? It's been a while since we got an update.
Yeah, that's right. So what we have announced is that we are in negotiations with ADNOC for a potential merger of Borealis and Borouge, because that would create a global polyolefins player of bigger dimensions. And with this, this would be an acceleration of our strategy. We are in ongoing and open-ended negotiations with them. And while we are doing that, we are executing on the strategy that is also a strategy that we can execute as is.
Are you confident that some of the issues being discussed are going to be ironed out in the near future?
That's always difficult to predict in ongoing negotiations, but of course that's what we are working towards and hoping for.
Yeah. Okay, sir, that's a good place to leave it. Thank you so much for speaking to us. On the sidelines of Davos, that was Alfred Stern, CEO of OMV.
Jemana, thank you very much. Bloomberg's Jemana Besetcha joining us there from the World Economic Forum in Davos.
Let's turn back to what is happening in the Middle East. The long-awaited, long-delayed Gaza ceasefire has now begun. This, of course, after 15 months of war. The first phase of the 6-week truce deal aims to release 33 Israeli hostages and hundreds of Palestinians. Let's get the latest on how this is going to work out over the next few days. Ollie Crook joins us now near the Kerem Shalom border crossing.
Yeah, so listen, Guy, I mean, this is the first, we're almost now at 24 hours of ceasefire, and everything seems to have held. There were a lot of bumps along the way since it was announced on Wednesday evening. A lot of reticence, a lot of optimism, but also really, really very guarded optimism. You got the release of the first 3 hostages yesterday into Israel, 3 female hostages. 90 Palestinian prisoners also released back to that region. And really now today what we're focusing on is we've been watching aid trucks cross into the border at the southern point here of Gaza, right near the Egyptian border. Many of these aid trucks, some of them are coming from Israel, some of them are actually coming from the Egyptian border, crossing into Israel and getting into Gaza. And to give you a little bit of size and scope here, when I spoke to the border crossing, the manager of the border crossing, he says that there's going to be 800 trucks that will be crossing today into Gaza. That goes from basically the average of what we've been getting for the month of January, according to aid organizations I spoke to, of about 50 trucks a day. So that is a massive increase. About 600 of them will be at the border crossing at Kerem Shalom. And really, this is the number that they would like to have be the sort of standard going forward. Before the war, you were getting about 500 trucks a day. That is what they'd like to have the daily average for an area that is really in dire need of, yes, humanitarian aid, but also those commercial supplies like gas.
Yeah, so we'll watch to see whether those aid trucks do get through then, Ollie, and lots of anticipation that we see more volume going through. Phase one of this ceasefire then is underway. How likely is it, though, that we get to the next phase? There are a number of phase events that need to take place.
Yes, so Anna, theoretically, according to the architects of this plan, according to the Qataris, the Egyptians, the Americans, they really would like this to be the first of three parts that will ultimately end in the full end of the war between Hamas and Israel. Whether or not that will happen is a very sort of complicated process that will be governed by a few things. So we're not fully done with phase one yet. The hostage release basically will happen every 4 days or so. There will be 3 or 4 hostages released. In exchange, there will be Palestinian prisoners also released. That'll be about 2,000 Palestinian prisoners and about 33 of the hostages of the Israelis being held, not all of whom are alive. But really the big step comes to that phase two, because that phase two is the withdrawal of Israeli troops from Gaza. This is something that, as you can imagine, the Israelis will be very, very reticent to do unless they have all of the guarantees in place that the security situation in Gaza is under control. The question is, who is going to take responsibility for that? Will it be a third-party moderator? No one has stepped forward, and so it's very hard to see what is going to happen then. If after the 6 weeks they still haven't found an agreement, theoretically you can continue that ceasefire, but this is going to be really the sticky question. And for Benjamin Netanyahu, this is a very sort of difficult balancing act from the far-right coalition that he's been with. One of the ministers stepped aside on Sunday saying that basically this is a bad deal and left the government, leaving Netanyahu with only 2-seat majority. So this is a lot of tension going into this. And of course, a lot of this will be governed by the next president of the United States, who will be inaugurated in just a few hours.
Oliver Crook in Israel, thank you very much indeed.
Let's focus in on some of the other events we're going to be watching for this week then, Guy. Of course, let's say it again, that US stocks and bonds, those markets are closed today. It's a public holiday over in the US. We do have the Trump inauguration, lots of coverage. We have the World Economic Forum in Davos. Will that cut through? Will the Trump inauguration themes and all of the many executive orders coming through from that, will they be the main event of the week? Then later on in the week, though, Guy, we get a BOJ rate decision, expecting a rate hike there, and lots of global PMIs. So there are the sort of more traditional data points and monetary policy focuses for markets.
We're going to get some labour market data out of the UK as well tomorrow, which I think is going to be really critical. A softening in the UK labour market may encourage the Bank of England maybe to be a little bit more aggressive when it comes to the rate cut story. Are we going to get that cut in February? I think it's a critical question. As you say, the PMI data on Friday is going to be interesting. There's some interesting corporate stories as well. Burberry's going to be one of those, updating on its future. What is the strategy going forward from here?
Yeah, Netflix and Texas Instruments also stood out to me as ones that could be of interest.
OK, that's it for the opening trade. Don't miss our coverage. It starts from Davos today. In the next hour, Francine Lacroix has an exclusive interview with BlackRock's Vice Chair, Philip Hildebrand. We're also going to be hearing from Nicola Mendelsohn. All of that coming up. This is Bloomberg.